Hello, welcome to my YouTube channel. In this video today I am going to tell you the impact of COVID-19 on the trade balance of Bangladesh. The global economy is hard hit and almost all the countries felt the negative shock of COVID-19. The global economic growth in the first half of 2020 has been severely affected. Bangladesh, like many others across the globe, struggle with the number of infections and the new normal of COVID-19, social distancing, virtual meetings, online classes, etc. Since reporting the first case on March 8, 2020, as a result, people across all socioeconomic backgrounds had been adversely affected. Bangladesh balance of payment deficit has surged to record a level aimed at an increase in imports as business rushed to replenish depleted inventories to meet strong demand due to the pandemic. According to the Bangladesh Bank, in the 7 months between June to January this fiscal year, the balance of payment deficit, which measures the flows of goods, services, and investments into the out of the country, stood at $10.06 billion. In the 2020 to 2021 fiscal year, there was a surplus of $1.55 billion in the same period before it dipped to a deficit of $4.58 billion at the end of the year. Before that, 2019 to 2020 fiscal registered a balance of payment deficit of $5.44 billion. The latest deficit in the balance of payment exceeded the previous record of $9.56 billion from 2017 to 2018 fiscal year. The balance of payment reflects the state of foreign transaction in the country. The expenses include import, export, and other regular earnings and spending. Achieving a surplus in the BOP allows the country to stay away from loans to fill in the gap, while a deficit forces a debt. The economic experts are comment exports have not increased as much as imports have, and that is a key reason behind the deficit. A decline in remittance growth is also responsible for it. The first 7 months of this fiscal year saw exports of $27.98 billion and imports of $4.67 billion, causing a trade deficit of almost $18.69 billion. In the corresponding period, the previous year, the trade deficit was $10.27 billion. In the 2021 to 2022 fiscal, the first 7 month yield remittances of $12.33 billion, which is $2.9 billion less than the same period of the preceding year. After the pandemic finished, then the Russia-Ukraine war has compounded the causes for the deficit to widen. The oil is driving prices of the international market. The prices of oil have particularly risen. Bangladesh will have to pay more in foreign currency for the same amount of oil than it did before, and that will cause the deficit to widen further. The pandemic halted investment in our country. Imports are going up as investment resumed. Besides this, more export also mean more imports. If import increases to bring over capital, machinery, and raw material, that's a good thing. Investment in the country is causing production to expand. The problem is we are not being to able settle the cost. We usually settle extra import cost with remittances. It generates surplus in the BOP. There is a big pressure right now. The dollar rate are increased and domestic currency rate is decreased. Import cost is very high. That's why foreign exchange reserves are pulled to down. In this stage, we face dollar crisis against our new LC and importing products. The government should pay more attention to cover the deficit and to focus on the exchange rates and imports. The government should take decrease inflation rates and take any step for future which is good for the balance of payment of our economy. Thank you for watching my video. Allah Hafiz.